How's it going, guys? So I want to teach you this very simple strategy that I created. It's on the 5-minute chart, and it works with all pairs. I'm going to use gold as an example, and it's a very, very simple strategy, but you do still need to understand some of the basics of trading. So what we're going to do first, before I go over these boxes that this particular indicator creates, I want to go over understanding higher highs, higher lows, lower highs, lower lows. So let's go over that first. And so I'm going to make this super, super simple. So the market is either going to be, let's just get all this stuff out the way for now. Let me move all to the side so you can see it better. We're going to make this super simple. The market is always going up, then down, and up, then down, and up, then down, then up, then down. That is called an uptrend, where we're looking for potential buys. Or the market's going down, then up, then down, then up, then down, then up, then down. This is called a downtrend. Now, when this market is doing something like this, it's creating something, when it's doing the uptrend, it's creating something called a higher high, and then it creates something called a higher low. So basically, and this higher low is not created till you break this higher high. So what happens is that the market, so people ask, how do you know where the higher low is? It's very simple. Once this area gets broken, wherever the area was where it went the first down will be considered a higher low. So you don't know where the higher low is till the market goes like this. So I'm gonna give you a perfect example. Let's remove all this for now. The market goes up, right? It can do anything. It can go all the way up like this. Cool. When it comes down, it can go all the way down like this. Now, we know that this is a potential higher high, but it's not. I don't consider it a higher high until it does certain things. Number one is it has to do something called retrace. Retrace means it's going the opposite direction of the trend. So if we're doing an uptrend, then it's retracing backwards, which would be, a retracement for the going down. Then it has to go up. It has to break this area. Once it breaks this area, this now is an official higher high, and this is now an official higher low. Now, if the market comes down just like this, we don't consider this a higher high yet until it breaks that area as well. Now, if it comes up, this is now a higher high, and this is a higher low. Now, there are some things that can happen like this, right? It can come all the way down and break this higher low. Now, this is where most people mess up. They believe because it broke this higher low, that now the market is about to be trending down. And that could be right. But there are certain conditions that I'll look for it to be a downtrend. So we're gonna go over both reasons. Now, it went down, but then, and this is where a lot of people mess up. It can go down, but then it comes back up. And now it broke that area. So now, instead, I don't consider this I don't consider this a downtrend. So now we have our higher high. And we can consider this the higher low then. So, super, super simple. Now, let's say that it does it again and it comes down. But it comes all the way down here again. And you're like, okay, now it has to be a downtrend. Well, we don't know yet. Because it could come up here, and that creates that new higher high. I don't know if this is a higher high yet, because I need to come break this. So, what if it does this instead? It comes up, it goes up. Now, this is the phase where you're like, okay, it's either going to continue up as an uptrend or continue down as a downtrend. How do you consider which one is which? Super, super simple. If it breaks this area, it's a continuation of the uptrend. If it breaks this area, it is now a new downtrend, which a lot of people like to call it a change of character of such. So let's say it comes down just like this. These conditions have been met. We now have a lower low, a lower high, and a lower low. So now, when do we get in for a potential sell? When the market goes up here, it can do two things. It could break this, and if it breaks this, we need it to break it, then do this for it to keep going higher highs. But we're not looking for sales, buys, and now we're looking for sales. So I'm looking for it to break this area. This is where I would sell at. So it comes down here. This would be your sell area, and then that's your sell, and cool. That's your new lower high and lower low. Then it just continues the same thing. It comes down, comes up, and this time it can go all the way up here. But guess what? We're only looking for sales. It needs to break this. If it doesn't break this, then we're good. So again, they can go all the way down here. Now we broke here. This is where we look for our sell area, and it broke it. Boom, you're selling down. Then it can come up again. Then it can come right back down again, and now we're looking for sales. And that's why you don't prematurely do anything until you see it follow that rule. Oops. So now let's keep going. My computer's acting crazy. All right, whatever. So let's look at that. Whatever. Now it comes down. Whatever. And it comes back up again. Cool. I'm still looking for sales only until it creates a higher high and higher low. In order for that to happen, it has to come up here, break that, come down, then it needs to break this area, come up. Now we have our higher low, and now we have our higher high because the conditions have been met. So now what is our entry going to be? It's going to come down. It's going to break this area. Once it breaks this area, we're going to look for potential buy. Comes here, that's our buy right here. And it goes up. It comes down. This is our buy area when it turns around. What happens? It turns, it goes here in our buy area. Boom. Comes down, that's our buy area. Boom. It comes down, breaks that. Cool. We're still looking for our buy area. Here. So now you get it. Now you understand higher high, higher low, lower low, lower high. Now, and the rules behind it. Now, how does that to do with this indicator? You need to know those rules to understand how to use this indicator. So this indicator, you're looking for buys and sells based off if the market breaks the top of this box, we're looking for potential buys, or below this box, we're looking for potential sales on the 5-minute chart. Now, that being said, in order for this to work, you got to understand the higher highs and higher lows, lower lows and lower highs. So when this box breaks, we're looking for a break of let's look for example for a buy. So if you notice, I don't care about none of this stuff right now. I need the break first. Now, once the market breaks, let's just look at it like this. I'm going to replay this real quick. Cool, the market broke. Now, there are certain rules we need to know when the market broke. Cool. It starts creating higher highs and higher lows, and I'm going to show you how to be able to read it easily. When the green bars are going up, it's going up. When the red bar going down, that's going down. That's a higher low. Go up. Remember the red candle's down? Cool. We got that. Now we got to break that area. It's going up. Now we don't have a higher high yet because we need it to start going down. So we're going to just wait. But this is where we're looking for our trade. So it went down a little bit. So now we can look for this area to break. But we need to go down, then come up. So if we look at it, let's say that we're looking for potential trade right here. And the reason we're looking for a trade here is because we waited for it to break outside the box for a potential buy. So let's say we put our stop. We haven't placed our stop loss yet. We're going to wait for the market to do its thing. Now, you would have gotten right here. Let's say you put your stop loss right here. You could have been below here. But we'll say we put it at below this box a little bit. And we can go for a 1 to 2. You would have gotten right here at this area when it broke. Then you would have just did your thing and won that trade. Super simple. Let's look for an example on sale. Remember, the box creates at 9 o'clock. We needed a break. That's how we create that box. So now I broke the box. Cool. But we need it to be creating higher highs and higher lows. So let's just wait a little bit. Now we look at it. And this is where you got to really just pay attention to those little green bars. Let's say it broke out right here, right? So it broke out at the beginning. It's 9 o'clock. It broke out. And you gotta look at each candle. Remember, the green bar is up. So right now the red bar is going down, so we're only going down. And yes, it was creating higher highs and higher lows before. So it was going down, up, down. This green bar is up, down. This green bar is up, down. This green bar is up. And you notice it never takes out these areas. Now it's going down right now. So now we need a green candlestick. Outside. And we only start looking for stuff outside. Now we went up. So what's the next step? This is our sell area. Potential. We want it to break this area. We can put our stop loss somewhere up here probably. And then we go for 1 to 2. And you don't have to. You can go for 1 to 2 around this area. And you can move your stop loss to break even once, you know, it gets to a certain area. But let's just see what happens. It entered. Our stop loss is up here. Take profit down here. And you would have lost that trade. It's fine. Now, I prematurely put my stop loss too early. You could have put your stop loss anywhere around here, up here. But I just want to give you an example. Let's just still play the trade out and see if what would happen. So as you can see, guys, it still dropped relatively good. The trade was still there. Sometimes you might get taken out. And his thing, if it gets taken out, you can come back in. Let's say that it does, because things like that are going to happen, right? Where it does take you out. Because maybe your stop loss is a little too tight. That's fine. Now, once you got taken out, you want to just wait for it to break that next low. What was that next low? This area. So that's your new entry. If you want to get back in, right? It's okay to lose trades. You can put your stop loss above this area. We're just waiting for it to drop. That's where you would have got in at. So super, super simple. It's okay to lose. And that's why I want people to kind of understand. So that's how you trade this indicator, guys. Super simple. Works on all pairs. This is go, for example. All you do is at 9 o'clock, you look for it to do certain things. Let's look at a couple more examples. Goes up, goes down, goes up, goes down. It went up. But that tiny little, it broke out. That tiny little red candle came down. Cool. You can look for your resistance right here. Once it breaks this area, you could put your stop loss below there. Take profit up here, whatever. And you would have won that trade. So, and it's like, again, your stop loss is subjective. You can use the last low. You can use the entire box. It's kind of up to you. Obviously, the box being your safest route. So that's how you trade this strategy, guys. If we look at it right here, it's higher highs, higher lows. We needed to break this area. It broke it. This is where your entry would have been. You would have got that trade right there. Let's look at another one. Look, we're looking at every single day. This happens every single day. Comes up, comes down. I don't care about nothing this because remember, I need to be outside the box. So it came all the way up. It started coming down. Where's our entry going to be at? Right here. You would have won that trade easily. Stop loss would have been below here. Let's look at another one. And again, you're not going to win every trade, but this is a very simple strategy with this box. Comes up. Broke the box. I need it to come down first. And it has to break this area. Like this top of this area. If you notice, it never really broke out of this area. It just kind of just stagnated. Then it started going down. Okay, cool. If it started going down below the box, then cool. It went down. I'm still not looking for trades in this area. It broke here. Came up here. Came down. Broke up here. Cool. Outside the box. That's the only time I look for my trade. Your sell could be like somewhere up here. Your stop loss can be up here. Take profit be down here somewhere. And, you know, you could have either won that trade or you could have, it depends what you did. So this is a pretty good trade, though. It was a really good trade. So Guys, super simple. Again, look at this one. We look at the first one first. It broke out. Cool. We needed to break this. Came up. You would have came down, and you might want to trade depending on your stop loss. But if we look at this one, came down, came up. We need to break this area, and boom. So that's it. Pretty much it, guys. That's how you trade this 5-minute strategy. Hopefully, this video was helpful.